Okay, so now we got to talk about cost and revenue behaviors. So cost behavior really is just how do costs react to changes in level of activity. Does the cost change when you produce more? Well, if it doesn't, we call that kind of a fixed cost. If it does, if as your levels of activity increase, your costs increase, well, that's going to be a variable cost, right? It depends on the level of activity. Revenue behavior is the same, except how does revenue react to changes in the level of activity? We can reflect this as an equation, which is y equals a plus b times x, where y is our dollars, our y-axis. A is going to be our intercept on the y-axis, so your y-intercept. And then b is going to be the slope of your line, and x is going to be the activity, or the x-axis. Okay. One thing that is very important to note here, and I would ask that you really try to focus on this, and that is the relevant range. And the relevant range is the operating activity that is normal for the company. Okay, so let's say you are a producer of cakes. I don't know, I've got a friend that runs a bakery, and she produces maybe 50 cakes a week, right? So it would not be fair or valid to budget her to create 175 cakes a week, or to determine or try to estimate her cost at 175 cakes per week. It's just not within that relevant range, right? And we'll learn a method that we can kind of determine what our relevant range is here momentarily. The next thing we got to talk about is activity drivers. So activity drivers are kind of the numerical measures that reflect the consumption or provision of resources. So let's say we wanted to talk about, what would an activity driver be for purchasing department? Okay, so let's say for a purchasing department, the activity driver may be, the number of orders that they're processing. Or let's say you are a marketing department. What's the number of product lines you have? Or if you were a assembly department, an operations department, how many products have you assembled? That kind of thing. Those are your activity drivers. So common linear behavior patterns. These are the ones that everybody's pretty familiar with. At least I think you've heard some of these terms before. So we have fixed costs or revenues. These don't change in total as the amount of the activity driver changes within the relevant range. Okay, so what this means is that as your activity driver increases, as let's say the number of units you produce increases, your fixed cost remains the same. Okay, it does not change. So an example of this would be like paying a flat amount of rent per month. So $1,500, that's your rent every month. You know it's your rent every month. It's not going to change. The next that we have is the variable cost or variable revenue. These change in direct proportion to the change in the amount of the activity within the relevant range. You'll notice that all of these definitions say within the relevant range, because if you recall, once we get outside of that relevant range, it's no longer valid or, spoiler alert, relevant, right? So an example of this would be if you paid employees commission based on the level of sales for the period, right? So, you say, we'll give you 5% of all sales generated this period, whether that's a month or 6 months or whatever the case is, and that's your salary. That's going to change every period based on the level of sales, which would be your activity driver. Finally, we have mixed costs or mixed revenue. These change, but not in direct proportion to the change in the amount of activity. So really the best way to explain this is that, let's say those same salespeople, we pay them a base salary each month. Let's say we pay them $1,000 every month. Plus, we're going to pay them a commission based on the level of sales for that month. So we'll pay them an additional 1% commission based on the level of sales for the month. So that would be a mixed cost. This is just a visual representation of those costs on the graph. Here we can see the relationships that we've established with the y-axis, the intercept, the slope, and the number of units. So you can see here that the fixed cost, right, just remains flat. Variable costs start at 0. It's where it intercepts the line. It's where it intercepts our y-axis. and it is going to increase with the level of activity. And then total costs are going to start out at whatever our your mixed costs or total costs are going to start out at whatever your fixed cost is. That's going to be where it intercepts on the y-axis, and it's going to increase with the number of units produced. Notice where each one crosses the y-axis. That is going to give you an idea of what kind of cost it is. So let's walk through a really quick example here. Pretty simple example. So let's say that Prairie Plants delivers potted plants. Several of the costs that they incur are not related to the number of plants that they sell. For example, the rent on the place of business or the manager's salary is independent of the activity of selling plants. These are called fixed costs. If rent is $500 a month, what does it look like if we graph it? Okay, so remember, our fixed costs, they don't change when the activity changes. Okay, the fixed cost per unit, and this is an interesting aspect of our fixed cost. The fixed cost per unit of activity does change. So if we produce 40 units, the cost per unit is $12.50 per unit. If we produce 100 units, the cost per unit is $5 per unit. So for fixed cost, as activity increases, the fixed cost per unit decreases. Okay, so that's just an interesting note. I know that's a conceptual question that some of the managerial and cost accounting classes like to ask. So just be aware of that conceptually. Here we can see that since this is a fixed cost and we're just looking at the total rent per month, even when the activity level increases from 0 to 100, we have no increase in the cost, which means that our graph looks like this. It will remain flat. Okay. So the actual cost to purchase these ceramic pots that are used for each plant will relate directly to the number of plants sold. This is a variable cost. So let's say that ceramic pots cost $10 a piece. What does that look like on our graph? Well, if we produce 0 pots, then it costs us $0. If we produce 10 pots at $10 a piece, that's $100, so on and so forth all the way through. So variable costs change in total in direct proportion to changes in activity. If we produce 40 units, you can see here, right, 40 units is going to cost us $400. If we produce 100 units, it's going to cost us $1,000. The variable cost per unit does not change. Okay, it remains the same. So here we can see we intercept the y-axis at the 0 because we're starting at a 0 activity level, and as we increase our activity level, our graph rises. Okay. Finally, let's talk about those mixed costs. So the cost of the delivery van has a mixed cost component. There's regular maintenance, there's payment on property tax of the van, regardless of how many miles you drive. Typically, when you look at vehicles, you're going to base activity on the number of miles it's driven. Okay. So, however, as the van is driven, with more delivery activity, additional maintenance may be needed. This is a mixed cost. Okay, so if regular maintenance and property taxes are $500, an additional cost per plant delivered is $10, what does that look like on a graph? So that $500, that's our fixed cost, right? That $10 per plant delivered, that's our variable cost. So you can see here, if we have no activity level, we're still going to have to pay $500, right? But as we go on, we'll add to that base of $500. 10 times 10 is 100 plus the additional $500 fixed. That's $600, so on and so forth. Okay. So mixed costs in total vary with changes in activity, but they do not vary proportionately. Okay. So let's say the cost to produce those 40 units is 40 units times $10 per unit delivered. That's $400 plus the $500 fixed cost for maintenance and property taxes is $900 total, but it doesn't increase proportionately, right? So let's say we produce 100 units. It's going to be $10 per unit delivered times 100 units delivered equals $1,000 plus that $500 mixed component or fixed component. Sorry. So mixed costs per unit decrease because of the fixed cost, but not as quickly as if they were entirely fixed. So since we are mixing in, if we recall, fixed costs decrease the fixed cost per unit decreases as the level increases. Variable remains the same. And when it's mixed, because of that fixed cost component, it still does decrease with the increase in the level of activity, but only much more slightly than if it was a total fixed cost. So I will end this video here, and then we will go on and talk about cost, revenue, and estimation, which is kind of our high-low estimations.